So when you're at the World Economic Forum in Davos, Switzerland, world leaders are passing by every minute. Yeah, it gets exciting here and there, but the crowds stopped and pulled out their cell phone cameras for this one. The Davos crowd got a dose of President Trump's America's First agenda as he walked through the Congress Center at the World Economic Forum. Our next guest was there for the speech this morning. We spoke exclusively to real estate mogul and billionaire investor Jeff Greene in the room with the president, describing for what the scene was like.
To get into the room, we were the last 10 people let in because they were setting up rows and rows and rows and rows of chairs where I'd never seen chairs before. They even had to break down the security table to put chairs at the very back. So the room was completely packed.
Then the huge crowds, I saw people holding up cell phones and trying to get just a shot of the president.
Yeah, there are world leaders here every year, as you know, because you've been here. I mean, I've never seen anything like it before. Last year we had Xi Jinping. It was just in a different category completely. The excitement, the thrill of people seeing an American president.
Because it hasn't happened since President Clinton came to Davos years ago. We watched the speech, certainly, as you were watching it. His tones seemed very measured. He was balancing his America First message by saying that doesn't mean America alone. How did the international crowd receive that message, Jeff?
Well, I think it was well received. And truthfully, Liz, I mean, he's had his team here for the last few days. So we've all been to panels with Steve Mnuchin, Elaine Chao, Wilbur Ross, and they've really all had the same thing to say, which is, basically that they're not anti-trade. It's not only America first, it's America first with everyone else included. And so I think it's the interesting thing that I noticed from this visit of the president and his cabinet members is there seemed to really be playing like an orchestra now. I mean, they were all saying the same thing, and so none of us were really surprised to hear what he said because we sort of heard it from his cabinet members throughout the last few days.
You're the president's next door neighbor in Palm Beach. Almost literally next door.
He's
you're a member of his
around.
Club, Mar-a-Lago, but you're also a billionaire real estate investor. What did you think of his message personally, aside from the fact that it was what you'd heard before?
Well, I mean, look, for me, I think that I could say this, that having monetary policy as the only game in town is scary. That's what we've been doing. $11 trillion on the central bank balance sheets, almost zero interest rates for pushing 10 years. That's unsustainable. So we needed to have fiscal policy, and I'm glad we did. I probably would have done, as a Democrat, I would have probably done a little different tax plan. I probably wouldn't have cut the maximum tax rate from 39.6 to 37. Instead, I would have maybe done an earned income credit so you could get some higher wages to people who need it the most. But in general, I think that as an investor and a developer and a business person, the economy certainly will benefit from having lower corporate rates. It'll help job creation, and it'll help lots of different ways.
Well, it kind of already is. You see hundreds of companies that are giving back to their employees. But, Jeff, the tax plan also had in it, aside from the positives, it has that situation where you see the elimination of the state and local tax deduction. And that is, at least if you believe the people who have been crunching the numbers, going to hit outsized, give it a bigger pain for states like California and New York, where you own a lot of residential real estate. Have you been anticipating how residential real estate homeowners are going to be hit by the fact that they can no longer write that off?
Well, look, Liz, I'm a Floridian, and most of my real estate is in the Palm Beach, West Palm Beach area. And so I think it's going to be a huge help for us. Look, I think that people aren't going to close their businesses in New York and make all their employees sell their homes and move their families to go to Florida to save state income tax. But I think the marginal mover, someone who was sort of thinking they're in their 50s, mid-50s, thinking, hey, in a few years we're going to move to Florida and get out of New York, get out of California and move maybe to Nevada or to Florida. It makes that decision that much easier because when you're not writing off that 13% surcharge and now it's costing you 13 instead of after-tax 6.5%, it makes the decision just that much easier. I think it's going to push a lot of very high net worth individuals who are actually big taxpayers in these high tax states to move to the tax-free the states without state income taxes like Florida.
Okay, and in turn, do you think that will strike fear in the hearts of governors of California, New York, and the other high tax states that we can put up on the screen to say, you know what, we got to figure out how to bring our state taxes overall down?
So if you look at, I read a statistic recently that 76% of all private equity goes to New York, Massachusetts, and California, the highest tax states. So I don't know that it's necessarily going to strike fear in those governors, because I think that in those states they're focusing on, building great human and physical infrastructure, which attracts businesses. And so I'm not sure where that's going to go, but time will tell.
You're also a major stock investor, Jeff. You famously shorted Twitter at $70. That looks like a brilliant trade now because it's $50 or so less. The Dow hitting lifetime highs again and again, S&P as well. What are you shorting now?
For me, I'm just cautious. I have a lot of cash. I'm happy to make 1 or 2% right now and just be ready, because I think that at some point this market will start to correct and move down just because of what I've just said. But I think at some point these valuations are not going to stick. We're going to have a correction. I mean, it's been a long ways up, and we're due for a significant correction.
And you got to really witness the big crowds there. They look like they were even bigger, I think, than for one of President Trump's former employees, Anthony Scaramucci, who had that trail of paparazzi last year. And the president didn't even have to wear sunglasses.
I can say this: if Donald Trump says that this was the biggest crowd in the history of Davos, he'll be telling the truth this time.